We can go ahead and get started now.
Mhm.
Hey, good afternoon. Thank you for joining us here today at the Multifamily Market Update presented by the Multifamily Investment Advisors team here at KW and Commercial and Keller Williams One Chicago. We have special guests Allison Melzone, Jerry Brown, and Christina Bones from Single Callahan that will be sharing some information regarding title services and property tax information. And before we actually get into that program today, we're actually going to let our Director of Capital Analytics, Drew, give us some updates regarding the multifamily market.
Good afternoon, everyone. My name is Drew Heitzman. I'm the analyst with the team, and I'll be brief here. But first, I'm going to share the chart of the 10-year Treasury, which we've all been tracking. So, been a pretty rocky week for the 10-year Treasury. It's been unique in the sense that last week, so it was at 1.63 on the 14th, and it on Thursday it hit a 10 basis point drop down to 1.53, which happens to be the lowest point in 4 weeks for the 10-year Treasury. And in addition to that, this is the biggest daily drop since early November, which is unusual considering last week the Fed released a good jobs report. Pandemic jobless claims are at a pandemic low. Retail sales have been up considerably. I believe they're up 9% over the last year. And in addition, there's been some worries about inflation. A lot of talk about inflation and the fact that interest rates have fallen, regardless of all three of these factors: job reports, retail sales, and inflation. It's unusual. So it's definitely something to look forward to and pay attention to moving forward. Really unsure where the 10-year should head, considering in a good economy, it's going to rise. And right now it's on a downtrend. So something to pay attention to, and look forward to keeping you guys posted next week.
Thanks for sharing that information today, Drew. We're actually going to let our guests now, Christina, Allison, and Jerry, take over the show. Please give us a little bit of information as to who you are, what information you could share with us today.
I'd be happy to go first.
Go right ahead.
All right, great. So my name is Allison Melzone, and I am with Stewart Title's National Commercial Division. I've been with the company for a year now. I'm based out of Chicago, and my role is to develop relationships with attorneys and investors doing business that are based in Chicago, doing transactions nationally. A little bit about what's going on in our world. So there's a lot of time that happens between the time of a contract to the actual closing. We are very behind. When we initially went into COVID and shut down, we had to have some major layoffs. And now everybody's running and scattering, trying to hire and recruit people from other companies because we are busy. We're short-staffed. Turn times are very slow. Water certs and zoning within the county are very delayed. So I try to coach and speak with the attorneys and the lenders and give them heads up, because what I'm seeing is, processors, there's a lot of turnover going on right now. So we're having new processors handle transactions from lenders, and they're not familiar with the way we do business in Chicago, and turn times are very delayed because of the county, and they're, behind and short staffed. So turn times are a little bit delayed. So that's kind of what's going on. Everybody's recruiting and paying big money to pull our competitors, processor, underwriters, and closers. So that's kind of what's going on here. Nobody's coming into the office. Transactions are being done virtually and remote. And it's working really well. We've been able to adjust to that because we were already doing that type of business anyway. But now it's literally nobody's coming into the offices, but we're looking to hire. So if anybody knows of those that are unhappy, companies are paying really well to recruit good employees, and they're hard to find. So that's kind of what's going on in our world. So just keep that in mind when you're placing orders and you're moving through the process. Turn times are slow. That's what's going on in the title world.
Thanks for sharing that, Allison. And I think Jerry, if you were next in line, if I'm not mistaken.
Actually, since I've spoken to you before, let's Christina, let her introduce herself, and then I'll go for Christina.
I am not Jerry Brown. In Bonesdale with Single Callahan law offices. And I also, whenever I talk to a KW group, I have to let you know, I was a broker with KW probably about 10 years ago, and actually was in the Chicago office before there was a Chicago office. So I'm very familiar. Commercial brokerage is my background. Most recently, I was at Newmark Knight Frank, and now I've returned, been with Single Callahan doing business development, growing our commercial side of the business along with Jerry Brown for the last 3 years. And I know from my experience of being a broker how important it is to have good relationships at your fingertips, because deals can move very, very quickly. And I'm just curious with the group here, are you all on the, are there, I know you have, I'm seeing some good listings happening. Are you all on the list side? Are you also on the acquisition side? What kind of group do we have here? I'm just curious. Who's doing acquisitions? Who's working with buyers? More all sale side?
No, I'm actually the guy who wears the working with buyers hat on this particular team over here.
Very nice.
Acquisition,
Yep.
especially for the team, and we're seeing a lot of people trying to get in the market right now. There's a lot of traffic going on, so it's been a good thing.
Vince, then we want to be a resource to you as well as all of everybody here, but it's right now, especially in Cook County, and we can get into that. I should back up. Single Callahan's home base is Cook County. Arnie Siegel is our founding partner. He started the practice over 30 years ago. Before that, he was a commissioner at the Board of Review at Cook County. So we've been doing this for a long time. We also have a national practice. So if you start dabbling in other markets, you let us know. We certainly can handle, property tax outside of Cook. Cook County, though, will be reassessed in 2021. I'm sorry, not just Cook County. The city of Chicago will be reassessed in 2021. If you have property and you have buyers that are looking in Cook County, it's really, really important to make sure that during the site selection process, you are paying attention to those property taxes. And I don't mean just looking at what the property taxes are, actually picking up the phone, calling Jerry, calling me, and saying, what's going on? We're about to either make an offer or strike a deal. We want to be have a good relationship with you so that anytime you can pick up the phone, give us a call, and we would be happy to review what's going on with those property taxes before your client the situation where they can't, their financial analysis isn't going to look as pretty because they have a surprise that their property taxes went up. And we see this time and time and time again. So we want to be a value add to you as brokers. Very, very important to do. We can certainly look at the current property taxes and why they are the way they are, but it's really important to look at the history and see what relief they may be receiving that a new owner won't be receiving. And then that would increase the property taxes, and to also know at what point of the reassessment cycle the property is in. That's really important. And I know it's easy to do a transaction and not realize actually that those numbers were last triennial's numbers that were used to run the financials. We need to make sure that we have the current one. So we want to be a resource to you. The great thing about the way that we work, unlike a lot of attorneys, we don't charge by the hour. We are a contingent fee. So we get the idea of getting paid once the job is done. We only get paid if we save our clients money. So that's also, it's kind of no risk, right? For the client. Should also let you know at any point, those property taxes should be appealed. Certainly they should be reviewed at any point during the process, but certainly once there is a closing, those property taxes should be appealed right away. And there's certainly situations where we've appealed on behalf of the sellers or the buyers during a transaction before the close actually happened. So those are some things to keep in mind. We are the property tax experts. Brokers are always supposed to be experts at everything, it seems, right? But really you need to rely on having the experts at your fingertips, which is what, we would like to do. And of course, we love introductions to clients and would be happy to help you tee up some deals and then, hopefully get working on those property tax appeals on behalf of your clients. So I'll kick it over to Jerry. And it will, if anybody has any questions, feel free to pop in and out here.
Yeah, really good information, Christina, as always. Thanks for sharing that. I have one quick question. Can we send existing clients to you that have had the properties for a little while?
Yes.
And can you look back in over like the years and sometimes see where there were inadequacies over the years and sometimes get them a refund check or a reduction? How does that work?
Yes, we can. There's also what's called a certificate of error. You can go back 3 years on those. Under the KG administration, it still isn't clear what their policies are for when they'll grant them. It used to be a little easier to get them under the previous administration, but yeah, we can go back 3 years on a certificate of error. Typically, we would need an appraisal to do that. So, we would do the analysis in terms of, is there enough potential tax savings to justify the cost of the appraisal? Or if there's something else, like if the assessor simply is completely inaccurately describing the property, saying that it has 45 units when it only has 30 or something like that, that's a factual error that could be made demonstrated rather convincingly, perhaps even without an appraisal. But yeah, we can do that. Even though I've spoken to you several before, let me give you a little information about myself. I'm Jerry Brown. I'm with Single Callahan. I am a native Chicagoan and South Sider. So I have a Hyde Park education. In fact, I went to Kosminski, Shoesmith, Lewisworth, Kenwood, and the University of Chicago. And I met Tony through the South Side Community Investment Association, where I think we were the treasurer, right? Or the secretary. So that's how I met Tony.
Yeah, for many years.
Valuable connections through that. One of the big things we like to be able to do for brokers is answer the question for your clients: what's going to happen with the property taxes if I buy this building? And under the last couple of years, under the new assessor, that is a very challenging question to get a grip on. And we've been doing buyers actually for free, and I'll be blunt as to why. Because for a sizable number of the people for whom we've done the projection, they were pleased with our work, and then they decided to hire us after they bought the building. And just to be clear that we won't be in the position of, or in the situation of, just telling you whatever you need to hear to close on a deal. Sometimes the tax picture is going to get really bad, and you need for us to be honest with you if that's going to happen. And I will. And for one of our largest clients, they were looking to buy a piece of property. I did my projections. They called back the next day and said, "Are you sure about this? Because if these are the taxes, we can't do this deal." So I did the analysis again. I called them back and says, "Yeah, that's really what's going to happen. The taxes really are going to go up on you." And then they called up 2 days later and said, "Well, we pulled out of the deal, and we found out that all the other prospective buyers, they pulled out also because of the property taxes." So we are eager to do the analysis for you and give you the best picture, but we also want you to be confident that you're going to get an honest calculation as to what's likely to happen. We're not going to just tell you whatever number you need to make the deal go forward. If the taxes really are going to be a severe problem down the road, you deserve to know that, and we will make sure that we're giving you the most honest and complete upfront analysis that we can. And we've also done cases where our client is about to buy, and we've represented the seller before the transaction. And the reason we do that is sometimes it's easier to get a reduction before the purchase, because if you purchase at, say, a higher value than what the assessor indicates, the assessor may just look at that fair market value and says, well, you don't deserve a reduction. You just spent $10 million. What do you mean you're appealing, telling me the property's only worth 8? If we can do that appeal before that transaction has taken place, that transaction isn't part of the appeal process. And we've had success getting reductions on that, and actually have a hearing in an hour at the board review on a case just like that. And, you know, there also be some cases where right after you purchase, if the assessor is letting the previous year's number just carry over, and after looking at, say, appraisal prelims and your expense and income and expense numbers and the cap rate, if it looks as though you're already getting a really good deal, we may recommend to you that just let sleeping dogs lie. You're getting the benefit of a really low assessment. Just let's let that carry over to the next triennial. But we will walk through with you analysis, so you know when it's best to kind of stay off the assessor's radar and just let the lower assessment just, or whether, you know, we need to gear up and appeal the very next year. But we're eager to be there with you to do that analysis. So thanks for listening, and it's been a pleasure getting to talk to you again.
And I always have to say, when we, you know, especially to brokers, because I get like the last thing you want is somebody to kill your deal, but just know, you know, so like Jerry had pointed out, if it's going to go bad with the taxes very soon, then you should know, because that is such an add value to your client. They will respect that you've saved them a catastrophe, financial catastrophe. And Jerry and I have many examples of that happening, where clients have gotten into a property, and if they just would have had somebody look at the property taxes a little bit more in depth than they did, they could have been saved a lot, you know, big financial burden. I have one I'm thinking about. It was in the first year of the assessor's new triennial in the northwest suburbs. The client, one of our clients, bought a property because they felt like it was the only property that they could run their business out of. And without proper consultation, they just thought, oh, Single Callahan will appeal those property taxes. Now we're having to, they tripled. So now we're trying to cut those down because they were served bad information from the other party when they were closing. So it doesn't ever hurt to get us involved. And we'd rather prevent, you know, making a mistake than in having that client take those funds and they're going to reinvest somewhere else. So it's not, you know, if a client is looking for an investment, they're going to find another investment that works better. So, but does anybody have any questions for us before we?
Thanks for sharing that. And I appreciate Jerry's honesty, right? And rarely, in my experience, it's not the bad news that kills the deals, it's the surprise that kills the deal. And if we can get Jerry involved as early in the process as possible, sometimes what we're able to do is negotiate the fact that the taxes are going up. If the buyer's agent knew the taxes were going up and 5 people pulled out of the deal as a result of it, and the seller knew the taxes were going up and people pulled out of the deal as a result of it, maybe we can come in and do some kind of a stopgap and sometimes talk to the seller, talk to the seller's attorney and say, hey, why are you trying to go for 110% tax proration here when we know things are going in the other direction? And really to kind of roll up our sleeves and do a little bit of the heavy lifting. And that's why you need good brokers, commercial brokers, to kind of help out in those transactions. And I'm not afraid of the facts. They're just numbers, right? If the taxes are 70,000 and they're going to be 120,000, we can deal with that. You're buying a property as an investment vehicle. You're not buying a property for a fix and flip. You're playing a long game typically anyway with these kind of commercial properties. If we can have that discussion, a lot of times we can get through the issue. So I do appreciate the honesty. I do know that Jerry, the news that Jerry brings is not always the news that that I want to hear. But I'm more happy that my client is in a better position to make a more informed decision, right? Because I don't want them to lose their shirt on a transaction. It's not worth it to me, especially it's only so many clients that are doing $10 million deals, and right. So you can't kind of burn through them and think you what are you gonna do, right? Start driving Uber. So you want to kind of work with Jerry and work with Christina to make sure that we're helping them to make decision from an informed position. Jerry, I know the reassessment, I think Christina talked about it a little while. We got a little while longer. I know the reassessment is happening, they're reassessing values and things like that. What is your kind of feeling about the way the winds are blowing here? And I know there's some headwinds coming at property owners. From what we're seeing from our vantage point, the positives in a lot of neighborhoods are outweighing the negatives. And it's just a situation where we have to deal with the reality, kind of like we were saying earlier, deal with what is, but look at what's happening, right? We got a lot of exciting developments going on in the city. We got a lot of growth in some areas that weren't seeing growth for a very long time. And the market, in spite of the health pandemic, in spite of everything that's going on in some markets around the country kind of falling apart, the Chicago market is making it through, right? We're doing all right. In some areas, we're assessing some values and seeing, in spite of the increases, in spite of the things that are coming at us, that the values are actually moving up, not in a crazy way, but they're moving up slightly. In other areas, they went down, but they're only down like 2 or 3%. It's not like the whole bottom fell out. And but if we take a serious look, that's what we're seeing. But what are you seeing as far as the assessment? What should we anticipate?
Well, what I expect is a continuation of the pattern from the first 2 years. The leases in the north suburbs, averaging around 77% for larger commercial properties and multifamily. And in the south suburbs, I think the average increase was about 50%. Now, the board of review through appeals ended up reducing that average increase in the north suburbs from like 77% to 27%. We're still litigating or appealing the south suburbs, so we don't know what that average reduction looks like at the board. I'm going to find out in a couple of hours because I have several hearings today. But I do expect a pattern of significant increases for properties on the south side, probably somewhere in between that 77% high in the north suburbs and that 50% figure in the far south suburbs. Obviously, there may be individual buildings that are outliers where the numbers are considerably higher, but that's the average I would expect. And again, even though we have a new assessor, the underlying law is still the same. They're supposed to be looking at comparable sales, income and expense data. And it may take us some more work through the appeals process to get your property in line with where it's supposed to be. But we do expect that through the appeals process, we can probably keep you in line with what is a traditional level of the increase of around maybe 20 to 30%, and then that number carrying over for the second and third year of the triennial. And for the clients who are either prospective buyers or existing clients, we do this analysis. For clients who are already working with, I'm already making lots of calls to them to explain what's going to happen, what's going to be our strategy. And a lot of it is going to be focused on show us the income and expense data. We really need to see it in detail. We really need to have it well organized so that we can make the strongest case possible for where this property is. And this hasn't happened yet, but I think this is one thing that's going to exert an upward pressure on property in this area. I know they've been talking about when they're going to break ground with the Obama library, but I know a lot of people are buying in anticipation of the Obama library and then the golf course renovation. I know the University of Chicago has been putting a lot of money in the area. So I think those are some of the things that are going to be drivers, upward drivers in terms of property value. But in terms of what we expect in the appeals process, we still expect that through the appeals where we can bring your property assessment in line with where it should be, rather than just living with a meteoric increase at the initial level from the assessor.
Awesome. Always awesome information for Jerry Brown. Those of you watching on YouTube, make sure you like and subscribe. I don't know, with that, Travis, you got anything?
Mo, I know you wanted to share a few opportunities before the webinar ended.
Yes, Travis, thank you for that. We're proud to announce 7201 Southwestern, a 20-unit mixed-use property with 2 retail tenants. It's a value-add opportunity. We have 7708 South Cornell. It's an 8-unit, recently renovated, and some units desirably located in South Shore. 1507 South Michigan. It's in the South Loop area, and it's a redevelopment opportunity. Nearly 27,000 square feet, ideal for office looking to transition or move into a more exclusive space, on-site parking, and there's also the downtown zoning. So it's a lot of stuff going on there. We also have coming soon 8001 South Justine. There's a 22-unit property, 22-unit apartment, and it's recently renovated as well.
Thanks for sharing.
Yeah, for any additional information on any of the properties, feel free to reach out to the Multifamily Investment Advisors.
Thanks for sharing that information, Mo. Thanks for joining us today on the Multifamily Investments webinar today. And we look forward to seeing you all next Monday. And every Monday, we'll always present the Multifamily Market Update. Thank you all. You have a great day.
Thank you.